What's going on, guys? Welcome to this video on time frames. Now in this video we are going to go over the importance of every time frame and how it can display price to you in many different ways, so how you need to then take that and bring it down to whatever time frame you want to trade on. So guys, let's get right into this. So guys, here we are on the daily time frame. Now, with this time frame, this is going to display to you your major structures as well as your overall trend direction, okay? So, with this in mind, the daily time frame itself can be the starting point for any top-down analysis. That's the way that you want to approach the market. You can also start with the weekly or the monthly. It's very much dependent on where you would like to start. At this very point in time where we are on Euro USD, we are looking like we're at the base of a overall big down move. So again, you wouldn't really be that aware of where you are in the overall down move until you look at the bigger time frames. If we stick to the daily, for example, you can see we're at the bottom of a move, but it doesn't give you much perspective as to where you are in the overall movement of price. So that already is an example in itself, how the daily displays it as a small upwards trend, whereas the monthly shows you quite a large rejection from an area that essentially is reasonably important when it comes to the overall structure and where price is currently. Now, this does not mean because we have essentially we've rejected from an area on the monthly, it does not mean that we're bullish all of a sudden. We need to be breaking structures that are significant. In this case, on the 12-hour, again, we can go back to the daily and look at this. The structure here is our key structural point. Now, we obviously have this high here as well, but that was produced by this push up. So from the base higher, we've now pulled back. So really, until we breach this high here, we can expect it to be bearish overall. We know that we are on a bullish move right now. And this is again why it's very important to look at the bigger time frames. So as you can see here, every candle is being represented by a daily time frame. So essentially there is 1 day's worth of data on each candle, and it continues to go bigger the bigger the time frame. So this would be 1 week per candle. So again, you'll have 7 days. Well, in the case of the Forex industry, you'd have 5 days within 1 candle. Because the markets are closed over the weekend. Not like crypto, those candles will be slightly bigger with your Saturday and Sunday candles being in there as well. But right here, like I was explaining, if we have a nice understanding that where we are right now, so we are at a point where, for example, if this area gets tapped back into and we start seeing bearish pushes away, it means we could either be continuing the downwards trend that we've been in for X amount of months, or overall mean that we're having a pullback to possibly come up and take the highs. Again, we have to assess price as it moves, which means the bigger time frames are important when it comes to that. And now, something I must tell you guys, you do not have to use every time frame. That's a very key point. You can stay on one time frame if that suits you, but for where most people are trading, it's always easier and just saves you the aggro to look across the time frames because it takes seconds. So guys, rather than spending a little bit more time on the smaller time frames trying to define where you are in bigger structure, simply just go to the bigger time frames. Saves you the job, if you were. So if we look at this now on the hourly, you can now already start to see why it looks very different. From the daily to the hourly, we have a very different looking price. Now you can see here across the days, so the dates across the bottom show you how long these periods are. But a great example is we can clearly see that this is an upwards trend, and we spoke about this on the daily. This is an upwards trend move because we're having higher lows, higher highs, and continually moving higher. So again, we have downwards trends inside of this. We have upwards trends inside of this. Again, another downwards trend leading into the upwards trend. So understanding where you are on the bigger structures and using the bigger time frames is going to help you a lot. Now, this isn't going to be the most in-depth video. There's not too much to go into with the time frames. For anyone that's using TradingView, if you want your time frames to be shown like mine, simply star them and they will appear across this bar. Again, it's up to you what time frames you use, but we would recommend most people using as many time frames as you can to have a full understanding and a nice overview in price. So if you understand that you're in a pullback on the daily, expect price to pull back into a given area and then continue the overall trend. Again, the same thing happens on the smaller time frames. So if you know now that you're in an upwards trend here, it means you can go down to, let's say, the 15 and look for the next pullback to continue. Also having in mind that there's an area across here which possibly could give us a bigger retracement or a reversal overall. So guys, just a quick video. I hope that has helped you just understand the basics of time frames. Again, nothing crazy, just to give you a nice idea of what these time frames can offer you and how they can represent the data that you're going to try and be trading. So guys, if you haven't already, make sure you hit that sub button, make sure you hit that like button. I'll catch you guys in the next one. Peace.